Hey everyone, I'm Brenton. Welcome to another episode of Wilson Weekly. We're joined by the fantastic Doc Wilson again. He's going to give us a little market update of what's been happening. How's it going, Doc?
Yeah, good, Brenton. Good to be here again. Of course, we're now into October. I always give the usual intro regard to where we are in terms of the year, but we're in daylight saving mode. So I'm down in Melbourne today. So we're sort of broadcasting through all the places, but there are some different time zones we have to adjust to. But gee whiz, Christmas is closing in. Can you believe it? And but look, housing markets keep on keeping on, and we've got the latest data as usual this week. This is episode number 99 of the podcast. So we're going to have our 100th episode next week. I'm not sure, other than lots of balloons and things, which we'll do, of course, whether we'll have any interesting data to look at. But keep watching this space. You never know what might pop up. But we need to look at what's happened over the past week. We've got some interesting data to examine. First, the rent report for September. So the latest, always the best first with the latest, of course, here at My Housing Market and Infinity. So we'll have a look at how rental markets are travelling. And there's still some recent trends looking a little bit better for tenants. Still a tough market out there generally. But trends are improving. And not that they could have got any worse, I don't think. And that's the point. But so we'll have a look at that, what's happening in rental markets. And we'll also have a look at the latest building approval data. We're waiting for more supply to come through into our housing markets. As we keep saying here, we are chronically undersupplied. That's no secret. It's one of the reasons we do have higher rents is that we don't have enough properties to go around. And driven, of course, by the return of migrants and particularly students. But no real sign of relief in terms of new development. I think really how we could describe new housing development is that it's sort of bumbling along the bottom now. You know, I guess we've reached the bottom of the downturn in building overall, but unit development's still looking pretty ordinary going forward. And of course, that's what we sort of really need in terms of volumes is more unit development, but that takes some time. Even when we get approvals, and it's approvals data that we'll be looking at today, we're talking 2 or 3 years after we get our building approval for an apartment until it becomes lived in. And as usual, we will finish off with the latest weekend auction report for last weekend. And as we always say, it's a very good forward indicator of what's happening generally in housing markets is what's happening with those weekend auction markets. We've had a little bit of a mixed environment for auction activity over the last couple of weekends. Of course, we had the AFL Grand Final the previous weekend, so that meant that the Melbourne market was on pause. And we had, even though we had the NRL Grand Final in New South Wales, we also had the long weekend holiday in New South Wales. And additionally to that, most states are now starting in the middle of the school holidays. So it's a distracted market, but nonetheless, we'll have a look and see what the results are telling us. And as I said, it gives us a broader insight into, as we know, into what's happening generally in housing markets. So we should always be looking out for those weekend auction results. So shall we get started with this week's extravaganza, episode number 99, so we can get our slide deck up and running. And there it is. It's up and it's running. So My Housing Market is my brand. I act as an independent commentator and data provider on the housing market in conjunction with Infinity. And excuse me, bit of a cough. And we're all about the current state and future prospects of housing markets, really the current state, because we really don't want to be looking at what's happened 6 months ago or 12 months ago. We want to know what's happening here and now. And hence, we always have fresh data coming up every week. And particularly that auction market data, as I just explained, is quite important. So going forward, this is the week to Wednesday, October the 9th, marching now through to the end of the year. So we're right in the middle of the spring selling season, literally right in the middle of the spring selling season. So it's the mid part of that market environment, which will run up to we punctuate it really by Melbourne Cup Day, which is the beginning of November. Of course, we're going to have an interest rate decision from the Reserve Bank then. That'll be interesting. We've discussed inflation last week. And then we move into the back end, the latter part, the end of the spring selling season up to Christmas time. So we're right in the middle now. We need to work through that school holiday environment in terms of auction market activity, but we'll have a look at that a little bit later and discuss it. So this week we're going to look at the September house and unit rents, August building approvals, and the latest weekend auction results, as we just discussed before. So let's have a look at our rental markets, our capital city rental markets. Now, it's a little bit of a conflicting report in the sense that we're still seeing, particularly for house rents, downward pressure on house rents. So we've seen that over the last few months. We've sort of moved past those skyrocketing rental reports of the last year to 18 months. And now we're seeing a much more moderate model of rental growth, particularly for houses. And yet we're seeing vacancy rates tighten. So even though rents have eased slightly over September, vacancy rates have actually fallen. And there's still, what we would consider to be historically tight rates, or near historically tight vacancy rates. So good news for tenants that rents are not continuing to gallop higher, but there's still plenty of competition out there for available properties. So we still have queues of people lining up when we have those properties advertised for rent, and that reflects those tight vacancy rates. But things are looking a little bit better in terms of rental growth. Now, we're going to understand that there are lags here. Just because we see vacancy rates tighten over 1 month, it doesn't automatically reflect that rents will adjust either higher or lower according to changes in vacancy rates. That can take a couple of months. Now, the point with vacancy rates is we did see a tightening, an easing in vacancy rates through June and July. And that's what we do see every year, because particularly the mid-year holiday effect, particularly from the higher education sector, which is a big driver of particularly the unit rental market. So that means that we see less demand, so therefore vacancy rates tend to rise. And then when that sort of seasonality finishes, which is September, August, September, we then see the vacancy rates adjusting back downwards, which is what we've seen. But as I said, there's not necessarily a same adjustment with rents as there is in the same period that we see changes in vacancy rates. I hope that's not as clear as mud, but it sort of explains why we're talking about tighter vacancy rates and yet lower rents. But look, generally, it just shows we're starting to move towards a better balance between supply and demand in our rental markets. It's still very much, markets are still very much in favour of landlords, with plenty of competition for properties out there, for vacant properties out there. But the stress that tenants are under in terms of rents rising month after month after month is not as severe as it was. And look, part of that is also affordability. With rents having increased, so significantly over the past couple of years, you can't just keep asking for higher rents and getting them, because it does depend on what people are earning. So people are constrained. If they're not earning more and more and more, then they can't pay higher and higher rents logically, although, they actually can. And I think that we've seen a bit of an affordability ceiling impacting our rental markets as well. So a combination of a few factors there. But as I said, a better balance starting to emerge. It is very much early days. Let me be clear, it's still a tough gig for tenants overall, and it's still very much in favour of landlords in terms of plenty of choices of prospective tenants out there. So let's have a look at the data. We saw Sydney, Melbourne and Brisbane lower, Adelaide lower, Perth lower over September compared to the previous month. Hobart was steady, and so was Canberra, with Darwin the outlier with an increase, the only capital city with an increase over September, up by 5.6%. But we are used to volatile month-on-month measures for Darwin, and that was just another example of that. So really some consistency there in terms of lower rents over September for most of the capital cities for houses. Over the year, once again, it emphasises just the strength of the market over the past year. Perth being the top performer with rents up by 9.2% over the past year, followed by Adelaide up 8.4%, Sydney up 6.7%, Brisbane up 6.3%, and Melbourne up 4.1%. I've ignored again Darwin. They've actually been up 8.3% over the past year. But of course, that does reflect a very strong result over September. But once again, consistently higher rents in all the capital city markets. And we're just starting to see that easing off a little bit over the past 2 months. And we await to see whether that trend will continue. I'm sure tenants are hoping it will. Vacancy rates, basically most vacancy rates were lower, as I mentioned, over September compared to August. With Adelaide and Sydney flat, and Melbourne's vacancy rate just rising slightly. But these vacancy rates are still very low. Most capitals are just over or just under 1%, with Canberra at 1.8% having the highest vacancy rate for houses. And as we explained, you can usually use 2% as a benchmark for a balanced rental market, more or less. That's what we see rents basically flatlining and the balance between supply and demand evening out. But with vacancy rates below 2%, we tend to see higher rents, and above 2%, we tend to see downward pressure on rent. So these are still very low vacancy rates. They still indicate upward pressure on rents. And once again, I think there's a little bit of a seasonal adjustment happening here compared to the higher vacancy rates we had through the winter period. Units slightly different. We saw upward pressure on rents mainly for units. Hobart up 2.3% unit rents over the month. Perth up 1.7%. Sydney, Adelaide and Canberra rents were flat. Unit rents were flat over the month. Melbourne just easing down by 1.3%, and Darwin, good old volatile Darwin, strong growth for house rents and strong decline for unit rents, down by 4%. We can see there we had some very strong growth in unit rents over the past year in Perth and Adelaide. Perth unit rents up 11.8%, Adelaide up 11.1%. Interesting, Sydney's flat over the past year for unit rents. Melbourne up 5%, Brisbane up 5.5%. So still some growth happening there, and a little bit better news in most capitals, but a little bit better news in terms of annual change in rents for Sydney tenants, where they've been flat. Now, vacancy rates are generally higher compared to houses, and that's what we typically see. Still, you'd suggest that they were favouring landlords, as I said, which means upward pressure on rents and competition for property. But and we use that 2% benchmark. You can see we've only got 2 capital cities there with vacancy rates above 2%, Melbourne 2.6% and Canberra at 3.2%. These are for units. So the Melbourne market, having shown some perhaps anecdotal evidence of a tightening in the unit rental market, it's just moving the other way at the moment. So we'll keep our eye on that Melbourne rental market and mixed results, but maybe overall lower vacancy rates for units over September compared to August. So again, same pattern emerging, a tighter vacancy rates and conflicting data here. Tighter vacancy rates in houses, but lower rents. We've got higher vacancy rates for units, but higher rents. So we'll wait to see how this settles down. But I think the big picture is that we've moved past the real chronic crisis period in our rental markets. I think it's an adjustment process that's occurring through social change to a large degree, not just more supply coming through. And that social change is that people are postponing their rental decisions, staying at home longer, looking for a unit rather than a house, looking for 2 bedrooms rather than 3 bedrooms, moving to an outer suburb or moving to a region. And that's what we see in periods where there's highly restricted housing choices which we have had for some time. So as well as, so it's not really, we're getting more supply, a little bit less demand. The government's has certainly tapped down on international student numbers in an effort to reduce demand for housing, for rental housing. But I guess we're sort of in the no man's land at the moment in terms of trends, market trends. So we'll see how that emerges or consolidates over the rest of the year. If you're looking for a copy of the My Housing Market September rent report, there on the screen is a QR code. If you could scan that, take a picture of that. It'll take you to a PDF copy of that of our latest rent report for September. So that's the rental market. Home building, we need more buildings to make us a lot happier in our rental market, well, tenants for sure. And that's why we keep a close eye on what's happening with home building. It's a bit of a yo-yo with home building. It's up 1 month, down the next, and that's a lot to do with unit development approvals. We were down 5.7% over August. This is the latest data, the August data, which followed a 10.4% July rise. It was all about units falling down 16.5%. Houses have been growing steadily over the past year, so there's better news in terms of supply coming from houses, but not so good news coming from units. So what happens with units is you get a very big development coming through in 1 month. It can be a couple of thousand extra units. And of course, that's just reflecting one big development or a couple of big developments. If you don't get the same big development the next month, it then falls away, which is typically what you see, that sort of yo-yo effect. All the states were actually lower for home building approvals over August compared to July. And the best performer was actually Victoria. And it was down, but it was only down by 3%, which, well, I say only, but it was the best performance of all the states. But we'll have a quick look at the data, the trend data, what's happening in terms of our charts. But it shows that we're still reasonably depressed. Anyway, this is the data, down by 5.7%, units down 16.5%, houses up just marginally by 0.5%. Over the year, houses have been performing a lot better than units, up 8.1% over the 8 months to August compared to the same period last year. However, units have fallen 8.5% over that same comparison. Overall, that would give us a 2% increase in home building dwellings over the year to date compared to the same period last year. And when we look at the full year on year, houses up 3.5%, units down 13.4%. So the problem in the market remains unit development when we're looking historically. And as I mentioned, that's going to keep us undersupplied because it is, that's the secret to providing adequate housing is to get more units. And there are a lot of roadblocks to have that occurring. But we are seeing some better results, certainly from the development of new houses. There's our trend there. You can see there, this is the overall national home building approvals, just sort of trundling along the bottom. We're continuing to track a little bit higher than the same period, or the same month last year, or the same period last year. So some better signs there that we're, as I said before, that we've sort of hit the bottom of the cycle, that we've stopped falling, and hopefully it's onwards and upwards from here on in. And this breaks it down into houses and units. And you can see the units, that's the dark coloured chart there at the bottom part of the chart. And you can see how that's up and down, up and down, up and down from month to month. And that's because of those changes we see, as I said, because of big developments coming through 1 month and then not having the same amount the next month. So you can see that volatile element, but you can look at the trend line, the dotted line there, that houses are starting to rise, the trend, and that's the quarterly trend. So it's looking at 3 months versus 3 months trend. But the units are flattening a little bit, but still overall the trend for units is falling. Melbourne's still the engine room for development for housing. Well and truly, we expect that. Typically, Melbourne approves around 40% of all capital city housing. I think we point this out every month, but it's interesting when you look at houses. We've spoken about house development leading the comeback in supply, housing supply. But you can see there that Brisbane and Perth are actually continuing to approve more and really significantly approve more units than Sydney. home of the unit. And yeah, so it shows you how Brisbane and Perth are responding, and Adelaide really, even though obviously it's a smaller market, how they are responding to all that demand that's occurring, pushing up prices and rents in those capitals, Brisbane and Perth, particularly Perth. So Perth is now approving houses more than significantly more houses than Sydney, and it's a significantly smaller capital city. But Melbourne continuing to surge ahead in terms of supply, and that's good news there, and maybe helping to keep that Melbourne market a bit more in balance compared to the others. But certainly the big three markets in terms of boom time results, big three in terms of results, Adelaide, Brisbane and Perth are building like there is no tomorrow. And of course, that's eminently believable given how strong those markets are. And you can see there where we look at building approvals for houses and units in the capital cities. And Perth's just roaring ahead there compared to the other capitals so far this year versus the same period last year. House building approvals in Perth are up 51.6%. Wow. And unit building approvals in Perth are up 115.9%. Sydney's down year-on-year comparisons. Melbourne up for houses, down for units. Brisbane down for units, and Adelaide down for units, but both of those capitals up for houses, particularly Brisbane up 17.7%. So this is the big picture trend for our capital cities. This looks at the annual growth rate on a month-by-month basis. So that's the number of annual building approvals taken month by month. And we can see this is the story of our undersupplied capital city housing markets, down 37.9% since that peak way back in 2016, which is 8 years ago now. And we're still maybe just, as I said, overall starting to find the bottom of the decline, but well below where we were way back in 2016. Hello higher rents, hello higher prices. And when we break it down, we can see there the black line, the black columns there are houses. That's the house chart. It had a big surge through 2021, and that was due to the previous government's home builder allowance that they had there as a COVID stimulus package, brought forward a lot of demand, and unfortunately pushed up house building costs, or pushed house building costs through the roof. That settled down, of course, and we're now starting to see that the house building trend, annual trend, picking up. But when we look at units, which is the area chart behind the black columns, you can see that's just really gone south, rapidly, and it's fallen by 59.8% since that peak 8 years ago. Unit development, and as I mentioned, units are where the future lies, and sadly, no sign yet of a revival. And even if it comes, it will take some time for that to have a real impact on our housing market. So it is all about the decline in unit development, and that's a really big ask, is to get unit development up and running, because it means we've got to start looking at seriously changing some of our planning laws, which is always problematic given the sort of neighbourhood reactions we get, quite understandably, to higher density development in those, particularly the more popular suburbs in our capitals. And there's no real, when we look at the decline from the previous trend and we look at what's happened in capital cities, there's really no capital that's improved its position. It's across the board here. All our capital cities have shown a significant decline in building approvals since that previous peak, which was typically back in 2016. In Melbourne, it was 2018. In Adelaide, 2021. So perhaps Adelaide doing a little bit better than everyone else, but still down compared to their previous peaks. So, and Brisbane the worst there in terms of unit declines, Brisbane and Perth. We have huge demand for units in Brisbane and Perth at the moment. Prices are going through the roof. And as we've seen, there's a lot of development in the pipeline there, but it will take some time before that booming development profile actually becomes live-in houses going forward. So that's our latest economic data. Rental market, yeah, quite interesting there. Are we starting to see a some better results, some more balance in our rental markets, perhaps, but we need a couple more months to consolidate those trends. But no real good news overall from building approvals, other than, houses are starting to pick up now, building approval for houses, but units are still trundling backwards. And we can certainly see a lot of development happening, particularly in Perth and Brisbane, reflecting how strong those housing markets are at the moment. So we're in the middle of spring now. We had a long weekend in New South Wales last weekend. So obviously those markets were distracted. School holidays have started now generally across the board. But we will start to see markets, sort of rebalancing. Melbourne bounced back in terms of numbers at the weekend following the pause for the grand final, the AFL grand final, when we only had a handful of auctions. But results were still quite reasonable, I think, in terms of having these distracted markets. 461 auctions in Sydney, well down on the previous weekend. No surprise, long weekend. Clearance rates just a little bit lower than the weekend before. Sydney just pushing down below its 70% benchmarks, which it's had for most of the past 2 years. So we need to keep an eye on Sydney. But look, Sydney market's been growing for some time now, and affordability barriers are starting to impact the market. There's still plenty of activity happening, buying and selling, but the prices growth isn't there as it used to be. And of course, a lot of the pent-up demand through those higher interest rate periods in 2022, 2023 has dissipated, but we're still getting good numbers of auctions coming through. When we compare Sydney's auctions to the same weekend last year, it wasn't a public holiday the same weekend last year, so we actually aren't comparing like with like, but clearance rate's not too far away. Well, interesting to see what happens with Sydney as it bounces back next weekend following the holiday. Melbourne did bounce back following the long weekend holiday grand final distractions, 1,079 auctions. Again, Melbourne's in those mid-60s, sort of, just tracked back a little bit lately, but still in the mid-60s where Melbourne's been for most of the year. Auction numbers, again, well ahead of where they were at the same weekend last year, and that's the trend we've seen all year. A real surge in the number of listings, not just for auctions, but properties for sale, as that back end of the cycle attracts more sellers into the market. And clearance rates, similar to Sydney, just a little bit lower or lower than where they were a year ago. Big numbers in Brisbane, more like the Brisbane clearance rate we're used to seeing, 55.7%. That's a good clearance rate for the Brisbane market, which has a different auction culture to the other capitals. We've had a couple of low results in Brisbane through September, which was a little bit of head-scratching stuff, but back to normal with Brisbane and good auction numbers there, well ahead of the same weekend last year. And the clearance rate a little bit lower, but the Brisbane clearance rates last year were record highs for that city, and it's starting to normalise now when we look a year ago. So a little bit of what we expect there for Brisbane, which remains a strong market. Adelaide is Australia's strongest capital city auction market. Its clearance rates are pushing up again towards 80%. Good auction numbers there following its distractions the previous weekend, but lower than the big numbers they were getting a year ago. And Canberra just is a bit 2 steps forward, 1 step back, as I say, for the Canberra market. Low numbers because it too was distracted by the holiday period, and a so-so clearance rate off just a handful of auctions that were reported. And when we look at the trends, Sydney just falling away a little bit, but this is just the first weekend in October, and it is suffered from that long weekend distraction. So we'll wait for next weekend's results. Melbourne down a little bit compared to where it's been, but the mid-60s is basically where Melbourne has been landing. We did expect higher clearance rates coming through in spring, particularly mid-spring in Melbourne, because we do see more activity in the higher priced end of the market, which is a big proportion of the Melbourne market. Seeing some early signs that might be occurring, but we need to watch the next couple of weekends for Melbourne to see if it can start pushing up towards 70% clearance rate on the back of better auction results for inner city, inner suburban prestige markets. Brisbane back up to where we thought it should be, even though this is just one weekend's results for October. You can see there for Brisbane really was a ponderous result over September for Brisbane in the 40s. You haven't seen that for some time in Brisbane in a main month. Adelaide keeps on keeping on high clearance rates, and Canberra just around about where it was so far of October to September. We're keeping a weather eye on that Canberra market to see if it can start pushing over 60%, as it was doing in the mid-year period, but it's fallen back slightly since then. If you're looking for those weekend auction clearance rate results or weekend auction results, you can get them on my LinkedIn site, which is Doc Andrew Wilson at LinkedIn. Every Saturday around about 6:30, we release all the capital city clearance rates, compare them to the previous week's weekend's results and the same weekend the year before, and the number of auctions conducted. So some interesting information there. And then we also have a full national auction report that's released on Sundays through LinkedIn, which has the regional breakdowns for Sydney and Melbourne, plus the top 10 sales under the hammer in each of the capital cities on that weekend. If you've missed that report, there is a QR code which you can scan, and will give you the copy of the latest national weekend auction report. Just to finish off now, we give our plug for our My Housing Market Infinity housing market app. This gives you all the recent data on asking prices and rents in every suburb in Australia that has data. There's a scan for that one. It is password protected. You have to get the password from our friends at Infinity, but it's well worth having if you're looking to see what's happening in the housing market, even if you're just looking at interest to see what your property is worth and what it's asking at the moment and what its rental value is. This is updated every day, so it's current information, and it is popular around the traps with our Infinity fraternity. So there's a screenshot of it. You could filter the app for price or rent. You could filter it for the capital city region or the outer capital city region or the outside capital city region. We've got Blacktown there. You can also filter it for house, unit or townhouse, and the number of bedrooms you can also filter it for. So we're looking at a 5-bedroom house in Blacktown. And it gives you not just the median asking price, but also the high and the low. So you can see the boundaries within which Blacktown houses, 5-bedroom houses, are falling at the moment, and also the number of properties that are for sale at the moment. So a handy one there, and you can do exactly the same thing for the rental market as well. So could you ask for more? The answer to that question is no, I suppose, because it gives you all that information updated, and it's a nice, cute little facility to put on your phone or whatever to be able to understand what's happening in the market in terms of real numbers on a day-to-day basis. Next weekend, we're going to look at the latest home loan data from the ABS. Some interesting results there. Let's have a look at the regional house prices. It will be our 100th episode, so we might have a few surprises as well. But we're going to look at regional house prices for September, and that's the major local government areas of all the states. And as usual, the latest weekend results. If you've missed any of the slides today, you can get a copy there by scanning that QR code. So a full copy for that. So that's all for me. It's been great again to finish in our our last double-figure episode before we move into the hundreds. 100. So yeah, let's hope it's hundreds going forward. And as I said, we're really moving quickly through the year now, and before too long, we'll be bidding goodbye for the Christmas break. But lots to go, a lot of water to go under the bridge till then. And we've certainly got some very interesting data coming up in terms of the economy, and we'll be, I guess, awaiting that Melbourne Cup Day meeting from the Reserve Bank just to see what happens. But we can discuss that a little bit later. So good on you, everyone. Thanks for the show today, and we'll catch up again next week. Number 100.
Awesome, Doc. Thanks for your time, mate. Appreciate episode 99, and we'll see you 100.
See you
Thanks,
later.
guys. Cheers.